Many buyers assume they need to have the full purchase price available in cash to buy a business. In fact, it is often not the case, as many business acquisitions are completed using an SBA loan. Hello, my name is Stetson. I'm your business broker. The SBA 7A loan is one of the most common loan programs used to buy a business. Typically with SBA finance business, the buyers need to contribute equity in the transaction, where the buyer contributes 10% of the purchase price and the SBA lender finances the remaining 90%. So for buyers purchasing $1 million business, the buyer may need to contribute $100,000, and the SBA lender would then contribute $900,000 plus the necessary working capital. But under the right circumstances, it may be possible to buy a business with only 5% down in cash. The way this can work is simple. The buyer contributes 5% in cash, the seller provides a 5% seller note, and the SBA lender finances the remaining 90%. Using the same $1 million example, the structure would be $50,000 from the buyer, $50,000 seller note, and a $900,000 SBA loan. This is why you may hear someone say you can buy a business with only 5% down using an SBA loan. The seller note, however, must be structured properly to be counted as a part of the buyer's required equity injection. The note must be on full standby for the 10-year life of the SBA loan. In plain English, full standby means the seller does not receive payments on that note while the loan is outstanding, with a balloon payment of principal plus accrued interest at the end of a 10-year term. Buyers like the structure as they may be capital constrained and can preserve more cash for working capital. Sellers are not as excited because a 10-year loan with no principal and interest payments along the way feels like a discount on the sales price. Plus, there is risk the buyer never repays the loan. On the other hand, agreeing to take on such a note can make a difference in the business selling at all. The bottom line is yes, it may be possible to buy a business with only 5% down using an SBA loan, but the buyer must be qualified, the business must have the cash flow to support the loan, the lender must approve the structure, and the seller must be willing to provide long-term seller financing. This is why I encourage buyers to speak with an SBA lender very early on in the process to head off issues that can arise later in the acquisition process. Again, my name is Stetson, and I'm your business broker.